Hello, I'm Adam Grimes, and welcome to our first installment of TradeLab. This is a long trade in crude oil, and this is being recorded after the close on January 22nd, 2018. So the purpose of this series is to look at a pattern that is happening now. So this is an actionable trade idea in most cases that you could trade in one way or another, and we'll talk about several ways that you might do that. But even more important is to see these theoretical patterns as they set up and as they work, and sometimes as they don't. So the pattern we are looking at here is this simple bull flag. We've had an ongoing trend in crude oil and then a little bit of a pullback. This is a trend line drawn over the top of the channel, and then you can reflect the same line back to the other side to get some idea of the type of volatility you might expect within the pattern. So this is, as it stands, a bullish setup. And where do we enter? So we don't want to be long here. If we're doing options, you could make a case for being long here, but basically what we want to do is we want to enter on some kind of upside trigger. So a very easy thing to do is to enter above yesterday's high, to enter above, perhaps the high of 2 or 3 days ago, to look to enter on a close above. A lot of different ways to do it, but the key idea is that we want to wait for some momentum to get us into the trade, expecting additional upside. If this thing continues to trade sideways and down, we'll never be involved. No loss, no harm, no foul. Now, of course, it is possible that we could get triggered into the upside and then it collapses. This happens in some relatively small subset of these trades, but it does happen. So we need to think about where your stop is. Since this is a relatively small pattern, correct stops, this is probably too tight. You generally don't want to be inside of 1 ATR or really in the noise of the market. So that's a stop that's too close. I could see a stop somewhere here to the outside, maybe here. With the same idea, if you're looking at this simple pattern, then you certainly don't need a stop down here. That's a stop that's too big. The stop needs to be somewhat proportionate to the pattern, and you need to be consistent. This should be a part of your trading plan. And then as far as profit taking, well, I generally like to take some profits when I have a profit that is equal to my initial risk in the trade. I like to take some off at that point. There is, in this case, the chance that this market is undergoing a longer-term trend change. And what you see on your screen now is a very long-term perspective on crude oil, which you might argue is not really relevant for a trade we're expecting to last a few days to maybe a few weeks. But I think it is interesting to note, by the way, this is an unadjusted crude oil contract, futures contract. So the levels you see are correct. The magnitude of the move might be off, but the levels are correct. And what we want to be aware of is that, first of all, structurally, crude oil has been in a downtrend for many years, has then gone flat, and in recent action, we've taken out some fairly significant pivots. And you could go all the way back here. I don't know that that's necessarily really relevant, but there is the possibility that crude oil has turned a corner, that we may head back up into this area at some point, and there could be a longer term trend. Now, that's not why I am suggesting, it's not the motivation behind this trade, but if that's how you read the chart and if that's how you see the potential, then you could be justified in using wider stops and not taking profits. But it's the beauty of these short term patterns. Sometimes they can play into longer term patterns. Last thought, if you are a stock trader, you certainly can trade something like this with sector indexes or trading individual stocks. I think that is really a mistake, and I always look for the simplest way to get the job done. And if I have an idea to be long crude oil and I get long a crude oil stock, maybe something happens to the stock or something happens to the stock market, crude oil goes up and I lose on the trade. I don't like to be in that situation. So one possibility, of course, is if you trade stocks, you can look at USO or a similar exchange-traded product that tracks crude oil very well. Only thing that I would call your attention to, you need to be aware, if we look at recent data, this looks very polite, right? It looks okay. It looks tradable. Just do be aware that this will gap. And it will gap because much of the trading in crude oil happens overnight to the US, happens in Asia and Europe. So we can see significant price movements on the open. And it is entirely possible that you will get into this pattern. And if the trade doesn't work out, you might get gapped beyond your stop. And it could work also to the upside too. So it's just something to consider. This is a viable possibility for the trade, but you need to be aware of the potential gap risk. So that is all we have for this trade idea. I would encourage you to go to marketlifetrading.com. If you have not already done it, please work through the trading course. It's going to walk you through everything, reading patterns, developing your trading plan, and all of that stuff is very, very important for your long-term success. Thank you very much.